A quick disclaimer, this video is for education purposes only. Forex involves a high risk reward and a high risk business, and you should not trade with money that you cannot afford to lose. This channel serves as an education purposes and not as an advice to buy or trade in Forex instrument. See the description below in this video for full disclaimer. Hi, welcome to FX Newpip. Today will be our first step into Forex trading. In this lesson 003, I will cover what is currency pairs and what is pips. Let's get started. Before we start, let's recap the final slide of lesson 2. You need the book to keep notes and do your homework. Second, you need the commitment. Third, you need the laptop. And fourth, finally, a journal for your trading journey. Let's begin and remember to take note. Just to show you notes that I took when I started my Forex trading journey. I still keep my notes until today, which has turned into yellowish color. So, what is currency pair? Remember the first video, lesson 1? John traveled to Australia and exchanged his Ringgit Malaysia currency to Australian dollar. It works the same for other currency as well. Therefore, we call it pairs, and each pair have their own Forex codes. For example, if you look on the left, that is the few example of Forex pairs. Each Forex pairs comes with a base currency and also quotes currency. Base currency is the one you intend to buy or sell, and quotes currency is the one that you pay in order to buy one currency. Let's take Euro USD as an example. Assume that you want to buy 1 euro, which is the base currency. In order for you to buy that 1 euro, you need to pay 1.0895 US dollar. Likewise, if you intend to sell back your 1 euro, you will receive back 1.0895 US dollar. Why do we sell and buy in Forex, and how these two-way transactions allow us to make profit? Forex is different compared to other financial instruments. In this scenario, for better understanding, I will use stock trading for example. In stock trading, assume you buy a stock worth of $10. So, in order for you to make money, you will need to wait for the value to appreciate or go up. Say, from $10, your stock goes up to $12. You make $2 profit per unit of share you purchased earlier on. Whereas in Forex trading, if you believe that euro-dollar value will depreciate or weak against US dollar, then you will place sell. Likewise, if you saw news headlines saying that US will hike their interest rate, which cause US dollar will increase its value against euro dollar, then you place buy. Both way, you still can make profit. In stock trading, we are buying by lot or unit. For example, in Malaysia, one lot of share is equivalent to 100 units. However, in Forex, we term it as pip. Pip stand for point in percentage, and it is a measurement to express the change in value between two currencies. If you are still new to Forex, in the future you will see there are two types of decimal in Forex quotes. The first one is in 4 decimal values, and the second one is in 5 decimal values. The difference is 4 digits and 5 digits. If you notice the 5-digit decimal value in the right side photo, there are one extra digit. That is called pipette or fractional pips. In this slide, I will make it simple for us to understand about pip value. We are going to use GBP USD pair. On the left, the base price is 1.2284 and the quote price is 12287. It's very simple. Take the 12287 minus 1.2284 and the difference is 0.003. which is equivalent to 3 pips. Why it is 0.003 for that digit? It's because this Forex quotes comes in 4 digits or 4 decimals. On the right, we take 1.2293 minus 1.22911, which brings us a 0.00012 or equivalent to 1.2 pips. Here you will notice 0.00012 is 5 digits. Some trader will just ignore the fractional pips when it comes to calculations. Is it important to understand pip calculation? Not really. As long as you know how much per pip value in your account, that is good enough. Let's take another example how pip value can help you in your trading preparation. Assume you place buy on GBP USD pair, which represent a value of $1 for each pip at quotes of 1.22923. You place this trade at 4 p.m. 30 minutes later, the quote or price goes up to 1.23002 from original quotes of 1.22923. Means your trade is already generating profit. The calculation is 1.23002 minus 1.22923, and the difference is 0.00079, or equivalent to 7.9 pips. We take 7.9 pips times by $1, which will bring us a profit of $7.90. Please take note, different trading account carries a different pip value. I will cover this on my next lesson. Thank you. If my Forex education channel helps you in your Forex trading journey, please remember to click subscribe and also select the bell icon to get notified every time I post a new education video. Please share this channel to your friend if you find it useful, and let's together we impact a million lives.